The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the August edition of Digging into the BI. This is where members from the Maryland, D.C., and Virginia, as well as some of our selected guests, will look at the latest issue of the member-only magazine, the BI. And tonight we're going to be looking at four new stocks. It's going to be the Walt Disney Company, Constellation Energy, the Descartes Systems Group, and Amgen. This is a program that is sponsored by both the Maryland chapter and the DC regional chapter. And we'll tell you a little bit more about it if you don't know what the chapters mean or what better investing means as we go through the rest of us. We're glad you're here for this free event. And let's go to our next slide, Cheryl. This is a standard disclaimer, and all of these presentations are being done for educational purposes only. We are even if we have it listed as a buy or a sell, it doesn't mean that you should do the same. We believe, as Better Investing does, that you should conduct your own review and analysis of a company before you ever make an investment decision. We will try to alert you to stocks that the presenters will try to alert you when they are talking about a stock that they own in their own personal portfolios or in their club portfolios. And again, if we're showing you, if the presenters are showing you anything outside of the Better Investing community, it doesn't mean that either Better Investing or them are promoting or endorsing those particular products, websites, or services. And again, this session is being recorded for future use. Let's go to our next slide. So this is a little bit about Better Investing. Again, I see so many people here are regulars, so you do know, but in case you don't, this is a Better Investing. It's an investment education organization. And throughout this presentation, anytime you see something in a blue underline that's bold, those are hyperlinks, and you can get those if you download the handouts, and you can only get them if you're here live, and they will take you to the appropriate location inside the Better Investing site. We focus, as Better Investing does, on long-term fundamental investing, and all of us that are presenting are volunteers in the Mid-Atlantic region. Although tonight we have two people that used to be directors in either Maryland or the DC regional, but have since decided they'd rather be down in the warm climes of the South. But we're glad that both Helen and Kent are here with us as we make these presentations. Next slide. So we're also up on YouTube. We're making a nice little slow, steady climb of people looking at this. So keep it up. We're trying to get to 300 folks. Up there, you'll see in return for, we like you when we get these presentations up, and I'm a little lax in getting a couple of the old presentations up there. We'd like you to like the videos, share it, and subscribe, because that's how the algorithm at YouTube, which is owned by Alphabet, works. So that way, the more we do that, the more we can sort of build this channel and this information. All of the webinars that are up there on YouTube are organized into what are called chapters, which means you can just advance to the presentation you wanted to listen to rather than listening to all four or any of the upcoming events that we have. Next slide, please. We haven't had anyone ask about troubleshooting in a while, so I'll sort of avoid those. But down at the bottom in the green arrow, you can be able to see where the handouts are. And in there are going to be the completed 4 SSGs that are being done by the presenters tonight, as well as a completed slide deck of all of the presentations as one. And it's in that slide deck, a PDF, that you have all these hyperlinks that you can be able to then again look at if we're talking about particular things. This program is free, and you're welcome to share those slides with people in your club, prospective members, or anyone else that you want to be able to discuss your investing stuff with. Let's go to our next slide. So why do we do this? Well, we sort of believe in Better Investing, and we sort of like what it has. And so we're trying to be able to show people that are either new to Better Investing, know nothing about Better Investing, or have it but don't always necessarily know how to use all the resources that are available. We're trying to show you how to be able to use the resources that you get either from the magazine or from the website. So we want to dig in and make sure that you understand ways to be able to use your membership to be able to come. And if you're not a member of Better Investing right now, again, there's a hyperlink up at the top for a 90-day free trial that you can be able to try and see if this works for you. We focus on the two main products that we have for forms to analyze stuff, the Stock Selection Guide, or SSG. Periodically, we'll talk about the PERT report, which is a way to sort of manage a portfolio. And what we're really trying to do with this website is sort of practice best practices for a long-term fundamental investor. Like I said at the beginning, this is a joint program of the Maryland chapter and the DC regional chapter. We're trying to promote our model clubs, and we're also trying to promote your club, especially if you're in the Mid-Atlantic with the Club Connect program. And Cheryl will talk about that in just a moment. But we want you to be a member of the BI community here in Maryland, DC, and Virginia. If you're a member of Better Investing, but you don't live in those jurisdictions I just outlined, we're glad you're here. We want you to be here. If you're not a member of Better Investing, you're also welcome. Let's go to our next slide. So in just over an hour, we're going to go over 4 stocks, 2 that come from the member-only magazine that are featured, the Stock to Study and the Undervalued feature. And then we want 2 more that come from your BI subscription. It can be from a screen. It can be, it's one of the top stocks, top 100 or top 200. It can be from the ticker heat map, or a whole myriad of different places in the magazine, or even your personal experience, or if it's in your club portfolio. But these are ones that we believe you'll be able to get some good value. And we all, inside this community of long-term fundamental investors, we all tend to look at pretty much the same cluster of stocks. Let's go to our next slide, please. So here's where we found the 2 featured stocks. This is on the BI website. And again, there's a hyperlink. It's at About News Releases. And these 2 stocks, this is Disney and Amgen, were announced on June 5th. As you can see, where I have that yellow or the red circle, 2 of them above there, we already have the September and October ones there. So you can be able to sit there and take a look at what's upcoming, be able to discuss it in your club, be able to discuss it with other people that you like to talk investing with. And again, this can be seen by both members and non-members alike. Next slide. If you're a BI member, you can also get information about what's coming up. And you can be able to do that by, if you see up at the top where I have the red circle for my account, if you click on that, you'll open up sort of to the screen capture on the left-hand side where I have the red solid line there. And if you go down to email and product subscription information, you can click on that where the green circle is, and it will open up and be able to allow you to be able to get notices either from headquarters or from your local chapter. The arrow down there in the lower right is pointing to your local chapter. So whatever chapter you're in, and a chapter is basically just an area of where people get together that are like to discuss long-term fundamental investing. They become directors. Directors is a fancy title for being a volunteer, but it's just a great way to connect with everyone that's in your community and what's going on. Where the yellow highlight is, that's the BI Weekly Newsletter, and they feature a lot of things that are going on at headquarters and big national events that are going on. And so if you do that and then you hit the Save Changes in the lower right, you will be able to get all the news that's coming on up. Next slide. So this is what it looks like. And again, this is just for members only. But again, it features a lot of national events, clear things that are going up. It comes out at the close of business on Thursday. And if you signed up for it and you're not getting it, check your spam filter. But we have a couple things here that look kind of interesting. They have the do's and don'ts of investment club members. That's a featured event that's going to be in the middle of this month. That's where the blue arrow is. You can take a look at it. And then I thought it was kind of interesting that they had some good stuff on investment research down there where the sort of gold arrow or light orange arrow is. So take a look at that, see what you like. They all have hyperlinks, so if you get it in an email, you can just click straight on it and go to it. Next slide. This is where we are up on Facebook. I didn't get the notice up for this week. This month, I should say. But again, this can be for non-BI members as well as BI members. This is stuff for both the DC chapter and the Maryland chapter. to be able to tell you what's going on in our community and the like. Next slide. Here is what's going on with the Maryland chapter. They have a really cool event that's coming on this Saturday. It's an in-person event. So, we do so many things virtually that we forget that we can do stuff in person. So this is from 10 to 1, and this is in Linthicum Heights. So that's sort of, what do I want to say, sort of North Anne Arundel County, just outside Baltimore. And they're having Jackie Koski, a national a speaker and director, wonderful person, wonderful story, is going to be speaking about pathways to wealth. Take a look at it. There's a cost that goes on with it, and you can register. You do not have to be a member of the Maryland chapter to do it. If you're in the area and you want to, come on over and do that. I know I'll be there. And they also have a wonderful newsletter on stuff that's coming on to take a look. They also have a chapter portfolio contest that's going on and is ready to end towards the end of this month. Next slide. Cheryl, take it away.
Hi, everybody. The DC chapter is having a number of events. We have, besides tonight's event, Model Investment Club Ignova, and we'll talk a little bit more about that in a minute, as well as another Model Investment Club in Maryland. And again, we have another slide for that. We are also going to be in September on the 20th, which is a Saturday from 9:30 to 1:30, having a planning meeting for the DC chapter. And the Saturday before and the Saturday after, which is the 13th and the 27th, we are going to be giving SSG classes for beginners. And please come, and we will put up the notice to register for that very shortly. And we hope that beginners will come and listen to how you get through the stock selection guide as a beginner. Next slide.
Helen, tell us about your club.
Hi, I'm Helen, and my club is Rags to Riches. We got started in 2002 and there are now 15 partners. We meet on the fourth Tuesday of the month from 7 to 9 p.m. It's an online club, and we have live educational sessions. Our education course activity for last month was stop loss orders, which was a feature in Better Investing magazine. And stock studies we did last month are Apple, Costco, and NVIDIA. And the point of contact, should any of you be interested, is Liz Peterson at live.com.
Well, Helen, thanks again. We're disappointed that as a former president of the DC chapter that you went down to Georgia, but we're glad you're still part of our community and part of the DC area. Let's go to our next slide. And this will be me, and I'm talking about my club, the Montgomery County Model Investment Club. We have 6 partners. I think we're ready to get maybe another one. In fact, they may even be in the audience tonight. We meet on the 3rd Wednesday of the month from 7 to 9. We're online, and there's a link. You can be able to join us. I don't know what our education is, but we are going to be looking at Nova. I believe it's a semiconductor company. And there's a picture of some of club members, but that's actually, we get together socially with a couple other clubs. So that's sort of a collection of people from a couple different clubs in that photo. But we like the social aspects that happen along with the club. So if you're interested, come see us on the 3rd Wednesday of the month, 7 to 9 Eastern. Next slide. Dan.
All right. Thank you, Kevin. Good afternoon, everyone. So I'm from the MIT, which is Millionaires in Training Investment Club. We're part of the DC regional chapter. We started in 2019. We have 13 partners. Our next meeting is August the 9th. Of course, we meet on the 2nd Saturday of each month from 10 a.m. to noon. Since the pandemic, we've been meeting online. We've yet to determine our educational topic for this coming Saturday. However, we will be reviewing 3 stocks from our current portfolio. There's the email address for the POC, so feel free to join us if you like.
Okay, so back to me. Model Investment Club of Northern Virginia, otherwise known as McNova. And you can see the picture to the right of most of our members. We started in 2008 with 14 partners, which is currently the number of partners, actually. The next meeting is August 19th. We're on the 3rd Tuesday of the month from 7 to 9 p.m. It's virtual, and there is the link for the meeting. You can also dial in using your phone. Education is going to be evaluating quarterly earnings reports. The stock to study is Third Coast Bank Shares, ticker TCBX. And our point of contact is mcnova@dc.betterinvesting.net. And still with me, there is a relatively new program with Better Investing called Club Connect, and it tries to bring together people who are individual members that are perhaps looking to join a club, either in their area or held virtually, and they can do so by filling out a form with the program. And it also goes to people who are in clubs that are perhaps looking for other members, and they can also fill out a form, and hopefully they will meet with others that are interested in what they're doing and get to interview each other. But please, if you are on either end of that spectrum, do look into Club Connect. It's under Investment Clubs tab on the front page of Better Investing, and you'll see it's the 4th point down, which says Club Connect.
Okay. And since this is digging into the BI, we like to be able to talk to you about some of the stuff that's available. You have both the old-fashioned paper magazine, but you can also get it as an e-magazine on the Better Investing website. Or if you look over on the left-hand side, if you have an app, you can be able to look at it through that too. That's actually from my phone, the screen capture on the left-hand side. It comes out earlier, and it works just as well on your computer, your laptop, a tablet, smartphone, any kind of electronic device. You'll be able to read and take a look at it. I know most of us are a little bit on the more seasoned side of life, and we tend to like paper and like to read it. But if you want to be cool and hip, like your kids or maybe even your grandkids or great-grandkids, try it with an app. Show them how cool you are. Anyway, those are the things that are coming out. Let's go to the next slide. And one of the things that happens if you want to get the app is that if you go to where I have the green arrow on the left-hand side, you see Better Investing Magazine for mobile devices. Click on that. They'll walk you through the steps. It's a different sign-in that goes on with that, and you'll be able to take a look at it. The other thing to keep in mind is where that red arrow is. That's the analyst reports and other resources. And for all the featured stocks, in that case is the stock to study and the undervalued feature, they usually have additional information, and you can click on that, and they have it stored up there on the BI website so that it's not part of the magazine like it used to be. So take a look at that. You'll be able to grab everything. And if you look in the center where it says View Magazine Issues, if you click on that, we'll go to our next page, and that will show you, again, some of the stuff that's going on. This is, again, one of the ones that featured. This is an old classic that I really like. Ellis Traub, I think he was really big when I came in a quarter of a century ago, and that is that he had a software program that was used extensively called Toolkit. A lot of those features are in the online tools now. But he did such a really good job of explaining the concepts and really what we're looking for, probably better than anyone else I've seen. And so he, again, talks about what makes a good company good. And take a look at this. It's very straightforward. It's very easy to understand whether you're an experienced person or if you're new to investing altogether. Next slide. And then here are some upcoming events. This is, again, a lot of them are online and can be free. So you can be able to see them just as long as you know what time zone you're in. And I'm featuring here the Arizona chapter is having their annual meeting on Thursday, the 14th at 6:30 their time, which puts it 8:30 for us. But Betsy Wills is a wonderful speaker, and she really likes taking a look at small stocks that can be part of a good traditional long-term fundamental investing portfolio. So take a look at her. And then the Georgia chapter is in person. I'm going down there myself. And so hopefully I'll see you down there, Helen. But that's going to be on Saturday, August 23rd, to join us at the Investor Fair. They do a wonderful job down there in Georgia. Next slide. So we've done enough talking on this so far. Now we're going to have two stocks that we're going to go off with. First, it's going to be Helen talking about the stock to study, which is a Walt Disney company. And then Dan's going to be able to tell us about Constellation Energy. And let's go to the next slide. And before I do that, I want to let you know that for audience members, if you want to see who also is in attendance, if you open up that the expand and contract control panel on the right-hand side, you can see some of the other attendees. So it's a way to sort of be connected and see who else is there. So go ahead and take a look at that. And with that, Helen, it's to you.
Thank you, Kevin. It's nice to be here. I'm Helen Albanese. I'm a member of the Georgia chapter, and as mentioned earlier, my club is the Rags to Riches Investment Club. The Walt Disney Company is the stock that I'll be talking about tonight. It's on the New York Exchange, and it is from the stock to study from August of this year, which Kevin has been showing to you. And it is in the top 100 of better investing stocks. And that is published on an annual basis. And this year it was published in April. You'll see at the bottom of this page some of the companies that are in the Disney portfolio. Next. And I found this stock, of course, as the stock to study for August from the magazine. Notice this blue bar here on the right. $60 billion is the plan to set the House of Mouse in order. As most of you know, they've had some financial troubles, and we'll see that as I get deeper into it. Some of those things are discussed in the blue text there on the bottom right. Next. Quick overview. We've talked about most of this. Look at size. Large cap, $215 billion. Sector is consumer discretionary. Entertainment is the industry. And I like these rankings from Fortune 100. Note top 50 for Fortune 500 and number 13 on the right among most admired. Next. Quick overview here. Got started in 1920 with Walt Disney and a partner making their first cartoons. Well, by 23, it had failed, gone bankrupt, and Walt moved to Hollywood. And in a few years, he had come up with this idea of Mickey Mouse and Steamboat Willie and made a little movie, and the rest became history. And Disneyland was opened in 1955. There's an interesting thing there. They picked the location for Disneyland after consulting with the California Highway Department as to where the roads were going, and transportation and housing were planned for the future. And it was Anaheim. And then you see what's been going on for the last few years. Next, please. Disney is a diversified company into various segments. Notice on the left, they have 3 segments. The first is entertainment, second experiences, we all know about these things, and sports. And over on the right, you see the revenue by segment for the year ending in September of 24. Entertainment, 45%, experiences 37%, and sports contributed about 19% to the total revenue. Next. How are they going to put the Mouse House back together? 10 years, $60 billion. They're putting a lot of money into theme parks. They are expanding and improving and upgrading and renovating the parks that they have. And in May, they announced a new resort, number 7, in Abu Dhabi. And on the right, you see cruise lines. They are big into cruises. They have 6 ships presently in their fleet. They plan 3 more, and their last ship launched would carry 6,000 passengers, which is among the giant size cruise ships. Next. Industry comparisons for Disney. Things are not looking too good here, as you'll see by looking at the last column. Growth for historical earnings, not that good. They're worse than the industry average. Pre-tax profit on sales, 5-year average, Disney is half of what the industry average is. And return on equity, 5-year average, they are way below what the industry average is. Next. Quick look here at our comparison to other industries that are competitors to them. And for competitors, I did choose Comcast. You'll see in the legend box on the right, Disney is the black bar, Comcast is the green, Netflix is orange, and Warner Brothers is the purple. And you'll see that Netflix comes out on top here under historical earnings per share. Next. And pre-tax profit on sales, looking at the same companies. And again, Netflix comes out on top and Disney is third. And the numbers are in the lower right corner in the boxes there. Next. Percentage of return on equity. Again, Netflix is on the top and Disney is third. But the thing about it is Disney is a totally different company, I think, from those things that came up as competitors, but a lot of similar things. Next. Let's look at Value Line. I have 2 pages from Value Line here, and notice that the last issue from Value Line was July 25th, so very current information. And look at number 1 in the middle of the page there on the left. The price has been down for the last 3 or 4 years, partly due to COVID and these problems they were having with political issues and restructuring and some other things. Number 2, the highs and lows for 25, high was 124.7 and low at 80. And number 3 on the left under projections for the next 5 years, you see that the projection is for 5 years, 195 with a 14% return and a low estimate of 130 at 4% return. And down at the bottom left, capital structure. On line 3 there in that box, you'll see long-term debt, 36 billion. Next.
5 minutes, Ellen, 5 minutes.
The Value Line shows that Disney is poised to rebound strongly. They think fiscal 26 will be good. We've talked about the experiences segment, and they think that streaming assets are the key growth driver. Next. A visual analysis here shows that they've struggled for the last few years. And look down at the bottom, fundamental company data forecast historical sales at 4.5%, and the 5-year estimate would be 117.191, and historical earnings per share 5% I forecast, and the 5-year estimate would be $6.24. We'll see that number later. Next. Evaluating management. Things here, look at 5-year average numbers. Nothing extremely strong there that was appealing to me. I'm not even clear why Better Investing picked this, but maybe somebody else can explain it. Debt to capital is 36.6, and BI recommends at the most 33%. Next. Some of the things to look at here are columns D and E, PE ratios, and down toward the bottom, current and trailing 12 months high of 25.5 and low of 16.6. And then on the bottom right, current PE ratio of 24.4, and I use that number later. Next. Evaluating risk and reward for 5 years. High price I project at 214.7, and using the $6.24 as my high earnings estimate. And in item B, notice my forecast low price is $78, which was the low stock price of 2024. And in section C, you see the zoning there for buy, hold, and sell. And item D, upside downside ratio of 2.4 to 1, and BI recommends 3 to 1. So again, under the recommendation of the national office. And item E, target price would be 80% at the end of 5 years. Next. 5-year potential. Let's look at the box on the right. We are presently seeing this stock as in the zone of hold, upside downside ratio. We talked about total return. They're showing here at 13.3%, projected return 17, buy price at 110, and a buy price based on the zoning selection would be 112, and the current price at 119. Next.
2 minutes, Helen, 2 minutes.
Thank you. This is a section in the SSG toolkit in which under audit, see the green box on the top line indicates things that as I do my stock selection guide, I am to check and be sure that I look at all these issues. And this comes up on every stock that you do. Thank you. Next step, next slide. Look at the red arrow here in the middle. This again is from stock selection guides that that a number of Better Investing members have contributed. Look at right below that red arrow, you'll see total studies. 78 people did studies, and the total return estimated was what the red arrow shows. It ranged from 1.2 to 39.1, which shows up in the bars on the right. Next. This is just a quick and dirty spreadsheet summarizing all of the stock selection guide numbers that members came up with as they did their stock selection guides. I like to look at the last 3 columns, low price, payout, and total return. Next. My conclusions are that this is a large size mature growth company and that we looked at in visual analysis. And next thing is they are restructuring. They lost a lot of ground since 2021. And we saw that in the numbers that as we went through and in the charts that's focused on in section 2, evaluating management. Earnings have been recovering since 2020, and that's in the PE history, section 3. The stock is a hold at 112 to 180 as the hold range, and that data is found in sections 4 and 5 of the stock selection guide under risk and reward and 5-year potential. And Value Line's conclusion is poised to rebound strongly this year. Next.
Thank you very much, Helen. Appreciate it. That was a tough one to do. So
Yes.
Anyway, next up, Daniel Parker is going to be able to tell us about Constellation Energy. And why don't you just take it away, Dan?
All right. Thank you, Kevin. Good afternoon, everybody, again. So I'm from the MIT Club, part of the DC Regional Chapter. And tonight I'll be presenting Constellation, which resides on the NASDAQ under the symbol of CEG. I found this stock in the BI stock screen, and it was also in the ticker heat map, and also in the BI top 200, number 180 in April 2025. Next slide, please. Okay, so a little bit about the company background, current price. You will notice I included from July the price of which shows $321.54. So it's been quite a jump. Fiscal year ended December. It's under the sector and industry of utilities. It's large with more than 10 billion in sales. Morningstar financial grade of C, and it is the nation's largest producer of carbon-free energy. It got its beginnings in 1907. Started out as the Dresden Generating Station Unit 1, and at that time it was owned by the Commonwealth Edison Company, and it began commercial service, becoming the first privately financed commercial nuclear power plant in the U.S. Next. So CEG, which I refer to it as the symbol, is a community supporter. They've contributed 20 million in company foundation and employee giving, and their employees have over 116,000 volunteer hours logged in service to different communities where they have services and provide services at. Next. Okay, how do they make money? So they make money by their generational fleet powers more than 20 million homes and businesses. They help to accelerate the nation's transition to clean energy with more than 32,400 megawatts of capacity. 90% of their output is carbon free, and they account for 10% of the nation's carbon free energy. They operate under 5 reporting units, and they are, as mentioned, the largest supplier of clean energy and sustainable solutions to homes, businesses, governments, and also wholesale customers in not only the U.S., but Canada as well. Next. So the future. So we're all aware that the data economy is coming. The data economy is coming. And for that reason, there are some companies that you recommend like Amazon, Google, Meta, and Microsoft. They are poised to be big time service providers within the data economy. And we also know it's coming because the administration has policies to sustain and enhance the global, America's global AI. And you can take a look at what the AI and crypto czar has said, that we need to build out these big AI data centers and get that power generated for them to do the things that we do with ChatGPT and Gemini and Copilot and all these other large language models. So the data economy is coming, and we will see in the next slide that within the industry, as you just saw, so a growing number of tech giants have turned to nuclear to help offset the growing data center energy needs that's driven by AI. So in particular to Constellation and Meta inked a 20-year nuclear power deal to support AI goals. So that agreement is going to extend operations at an Illinois center for the next 2 decades, and it's also going to replace an expiring state tax credit that was allowed for that center. It's also, that agreement is also going to provide access to zero emissions power for its AI goals. And in that agreement, it's going to support relicensing and continued operations of the Illinois power plant where state zero emissions energy tax credit expires in 2027. So Constellation has a family of businesses. They serve 2 million residential public sector business customers, including 3/4 of the Fortune 100. Next slide, please. So in the market, the shares have rebounded sharply since they experienced a drop in April, given the expectations of the accelerating energy demand growth in the years ahead. CEG plans to continue to seek capacity through reopening the 3 Mile Island nuclear reactor, pending acquisition of this natural gas company called Calpine, and then of course these data center power deals that they hope to put in place to support the data economy. CEG is also operating in a favorable environment. Most recently, there was some positive factors in that the government decided to expand the production of nuclear energy. And also in that process, they relieved some of the regulatory process surrounding the approval of nuclear reactors, and they extended some licenses to operate the existing properties. Next slide. So Constellation has some goals. Their goal is to eliminate 100% of the greenhouse gas emissions by 2040, and they want to do that by leveraging innovative technology and enhancing its diverse mix of hydro, wind, and solar resources. They believe that paired with their carbon-free nuclear fleet, they'll be able to meet their goals. And they feel like they're uniquely positioned to support economic growth and electric system reliability. Next slide. So the outlook is that Constellation is well positioned to capture value from the data economy. Their future geographic footprint and technology mix offer national solutions for large customers. So that's how they feel that their position has them well positioned to be able to operate in the data economy that's not only coming, but really taking place right now. Next slide. So here's just a snapshot of the value line projections. Basically, if you look over to the right of the screen on about the third line down beneath the target price range for 28, 29, and 2030, you'll see two dotted lines. That's what they call a target price range. It shows where they think the stock could rise up to. And then if you look over to the bottom right in that table, the annual rates, you'll see that the revenues are expected to grow at 4.0%, and the earnings is expected to grow at 18%, as evaluated by the value line stock analysts. Next slide.
5 minutes, Dan, 5 minutes.
Okay, historical sales. So now we'll get into the core SSG and the projection. So we wanted to first take a look here at the sales in 2018 and 2019. We eliminated those two because of the fact that at that time Constellation didn't operate independently. So we took them out because it just skewed the chart. But you can see that they have a 8.6% growth rate. And then over the past, over the recent quarters, they were at a 10.2. Next slide, please. So from the historical earnings per share, they were at a very high rate of growth rate of 36.9. I do want to point out that in 2021 and 2022, I removed those because at that time, the Echelon Corporation had completed a tax-free spinoff of its generational business into the publicly traded Constellation Energy. So prior to that, or during that time, they were consolidated. So it just wasn't a actual reflection of CEG by itself. So that's why we removed them out, just to show and demonstrate on the chart how the values laid out. Okay, next slide. Okay, so pre-tax profit on sales. So here, while the revenue grew in 2025, the cost rose faster and investment borrowing loss did mount. However, with improved cost controls arising from the electricity demand from the AI and the data center clients, and that progress on the nuclear project should help pre-tax profit on sales rebound relative to Q1 2025 levels. Next. Okay, so if you want to see it, in better investing, they talk about up and straight. This is a straight line here. This is definitely up and straight. So in general, our methodologies say that RO should be flat or trending up. The best managed companies should achieve a 20% or higher. At 15% is considered good. So right here, CG is at 13.91, so not bad, pretty close to what we consider to be a good average. Next, debt to capital. You can see that it's in the ideal range is 33%, just a little bit above We would like to see it a little bit lower, but it is decreasing from a year ago, so that's a good thing. Next.
2 minutes,
Forecast.
Kevin, 2 minutes.
Okay, so now getting into the forecast of sales, based on all the analyst estimates that we used, I averaged them out and came up with a 5.1, which I thought was fairly reasonable. And so at 5.1 estimated growth rate will result in a 5-year projected sales of 31.027 million. Next. And then in the forecast of EPS, we estimated at a 9.7. Okay, next. And that brought the average high PE 24.8 times the high PE forecast, EPS forecast of 15.8 gives a high stock price of 373.9. The average low PE went with 11.7. Multiplied by the EPS forecast of 9.49 to get a forecasted low stock price of 111. Next. Okay, so this came out on the sales zone. It came out a little bit higher than what we would have thought based on some of the data, but it's in the sales zone. Next slide. Okay, next. Okay. So at the bottom, the compound return, 1.9, 0.7 yield, 2.6 rate of return, and a current yield of 0.5 based on the average payout forecast. Next slide. So in closing, Constellation Energy, it's a large size, moderate growth company. It is well managed. It just, it's overpriced, trading at its 5-year high average PE. It's worthy of a candidate to put on a watch list. And it's a sale at the present moment. The total return is 0.1 to 1 upside down ratio, and a sale up to 308.20. That concludes my presentation.
Thank you very much, Dan. Interesting presentation. So we now have 2 more, and Kent's going to talk to us about Descartes systems. And Amgen, Lisa Fosslin is supposed to do it. I think she may miss it, so we'll have Cheryl pinch hit. But let's go to the next slide. And Kent, why don't you take us over and tell us all about Descartes systems?
All righty. Good evening, ladies, gentlemen, and esteemed colleagues. As you've heard, I'm Kent from the Alabama Emerald Coast chapter. And I thank Kevin and Cheryl for the opportunity to present this evening. The company we're going to explore, as previously mentioned, is Descartes Systems, which you'll find on the NASDAQ, the Toronto Stock Exchange, the Frankfurt and Munich exchanges. Next slide, please. I decided to leverage this stock study to improve my own portfolio. So full disclosure, my focus was to find either a company in an underrepresented sector or an international company in a sector which could use some additional investment. Using the roster equality, I was able to down select from the universe of 7,800 better investing companies to 59 companies, covering nearly every sector in the market. On this slide, you'll see the requirements for the roster equality. Next slide, please. I got them down to 59 companies, but that's still a lot of companies, and I wanted fewer contenders. So I focused on the underrepresented sectors in the portfolio, and that reduced the number of companies down to 10, which is a much more manageable number to do detailed screening. The remaining criteria on this slide reduced the number of choices, especially with a quick SSG, down to 2 companies, and that was Addus Home Care, a healthcare company, and Descartes Systems Group, which is a Canadian-based logistics company. So that's how we got to Descartes. Next slide, please. The choice was using ROIC, and I used ROIC because I learned from recent bank talks that return on equity can be artificially inflated by managers taking on additional debt. And ROIC puts each competitor on a level playing field. And this slide shows how you calculate that. Next slide, please. And here are the results. In short, Addus compared unfavorably to its peers, whereas Descartes compared very favorably. And let's see what the SSG tells us about Descartes. Next slide, please. Here we see a very pretty graph with the revenues and net income earnings per share up straight and parallel, which is what we really like to see. The numerical data are mostly encouraging, with revenues, EPS, and pre-tax profit up at least 15%, and some cases more. One note of concern was the most recent quarter earnings per share, which was only up 2.5% year over year, and we need to investigate that, so we will. While the fundamentals look really good, how does Descartes managing stack up against the rest of industry? Next slide, please. On their own, the managers look like they're doing okay. We can see that the profit margin is in the high 20s and climbing. Debt for acquisition is being managed very well, but the return on equity is concerning. We have a guideline of 15% or more because we want to earn 15% of our money so we can double our portfolio value. And here we're seeing 10.3 in the most recent year, with an average of 8.8 over the last 5. On the other hand, the return on equity has been increasing every year since 2019. But how does that compare to its peers? So the next slide. So these are the peers. And that most closely match Descartes' business and operations profile. And I picked these out of Value Line as opposed to the ones that Better Investing gave me. Next slide, please. Let me call to your attention the black line, which represents Descartes Systems Group's performance, and where we want the line to be on the top. So, for example, profit margin, return on equity, and ROIC, Descartes is at or very close to the top. And where we want the line to be on the bottom, debt to equity, Descartes always close to 0, which is the best position. Next slide, please. Descartes managers want shareholders to know exactly how good they're generating revenue. So this slide plays very well at the shareholder meetings. The next slide, please, does not play so well because of the little 4% year-on-year quarterly growth rate there. And that did not go over well in the last quarter. Next slide, please. So now we can take a look at how Descartes is comparing to its peers. We'll see that Descartes is in the lower part of the pack, growing sales only faster than OpenText, the OTEX. And that's disconcerting. But how do they convert revenue to earnings per share? How does that compare? Next slide. This peer comparison gives us a different look at Descartes managers. In the last 10 years, managers have grown earnings 24% per year on average and steady. That steadiness and predictability was calculated in the SSG screen, indicating that Descartes has an R-squared, or earnings stability, of 0.92, and that's really good. That compares very well with their peers who have provided either negative earnings, declining earnings, or maybe a single year of growth. Next slide. So other analysts think that, Value Line and CFRA preferred using a quantitative analysis on Descartes. So they really aren't doing much thinking. They're just basically spouting back what Descartes has been saying. However, Morningstar is pretty energized. They're saying that Descartes managers are using acquisitions to build a single entity capable of addressing a changing regulatory landscape and provide necessary calculations in evolving tariff regimes. Next slide, please. I found it very interesting that the bears are very concerned with acquisition costs and making performance easy to separate out, rather than overall world economic concerns, which could be a threat to Descartes. Morningstar indicated that Descartes has a very wide moat, which means it's very challenging for new entry into the industry. So that's an offsetting to the economic concerns. So maybe Morningstar sees an opportunity for Descartes. Next slide, please. After pulling data from various analysts, we can see that there's some concern about Descartes' future by the conservative revenue growth estimates. And yet there's some pretty optimistic estimates for earnings per share. Next slide, please. The SSG history gives, from what we can make out, forward good-looking projections, and we can make some good-looking projections from this. Next slide. You might note to this point, we've only focused on the fundamentals of the SSG. But what does Descartes do? Briefly, Descartes helps make companies move their goods more efficiently. They make money by selling access to software that helps businesses plan deliveries, track shipments, and follow rules for international trade. So they're moving goods and making money. And finally, the companies are paying Descartes for using the tools which help them save time and money. So everybody's winning all the way around. Next slide, please. This is the software tool suite that Morningstar and to a lesser extent CFRA believe is key to the success of Descartes. The Global Logistics Network helps shippers move goods from manufacturers to users in the quickest, most efficient means while meeting regulations and customs law. The network has a very large leg up on calculating and collecting tariff taxes because Descartes' been collecting data and developing calculation algorithms specific for shippers around the world. So they've had lots of calculations they have to do. Next slide, please. And these are the various elements of the Global Logistics Network, which Descartes is selling their subscriptions to. Next slide. Thank you. Now we're going to focus on the anemia that came in with the most recent quarter for that poor EPS. And I discovered two things. The first was that the cost of services revenue of running the Global Logistics Network, their big software program, was increased due to personnel-related expenses. And specifically, customer support was called out for people using the system. Meanwhile, the company has increased income from new and existing customers, which helped out a lot when the huge part of their customer base from the United States became really involved in turmoil and started reducing their need for shipping. And that's reduced the need for some of Descartes' services, which the managers believe at this point is fairly cyclical. So we'll see what happens. Their next earnings report out is in September. Next slide, please. So given the current trade war and tariff environment, many companies around the world are going to face the regulatory and challenging shipping, challenges shipping products. Smaller companies are going to need help shipping their products between companies. And so therefore, I really see a bright future for Descartes. Given the company's history, I think it would be a bit prudent to be conservative with revenue. So next slide, please. And so I estimated 10.1%, which you'll note is lower than all other analysts except Zacks. As Kevin says, I'm very pessimistic and very bearish. Next slide, please. So then I used the preferred procedure to add an estimate of earnings per share growth over the next 5 years. And I decided that 7.3% was even too restrictive and conservative for me. So next slide, please. To mitigate that restriction, I looked at other analysts and decided an increase to 9.6%, given the current environment, is prudent. And the growth rate is still less than all the other analysts. Next slide, please. So we're back to the pre-graph, and this time you'll see the revenue and earnings forecast on the right side. You'll also note that I've added the Morningstar analyst detailed estimates for revenues and earnings per share. And truth be told, I was more than a little surprised at how the EPS growth estimates that I created lined up with the Morningstar estimates. Next slide, please. So in order to get the best buy price, we needed to provide some judgments on the price to earnings ratio. And for most companies, we like to see an average high PE around 30. And we're not there with this company, and an average low around 20. And so I decided to eliminate what I thought were outliers among these outliers. And still, the PE ratio is quite rich. So this 10-year list of PEs looks to be part of the history of Descartes systems. Next slide, please. This is a little trick I picked up from Jonathan Hunn of the Maryland chapter, who suggested using big charts, which you can find on the SSG Plus. And those charts show the PE of Descartes was last below 50 in 2013, before it became a U.S. traded or publicly traded U.S. company, and it has frequently bounced around the 60s and 70s. Next slide, please.
3 minutes. 3 minutes.
Thank you. Therefore, a high PE of 70 seems reasonable, along with a low PE of 48 to establish our price zone. Next slide. With our choice of PE, we can now forecast a high price and a low price over the next 5 years to establish our price zones. Next slide. You can see the buy zone limits here. On Friday, just one trading day ago, the company was in the buy zone. Today, the company's share price moved into the hold zone, finishing the day at 106.46. They went up $2 today. Next slide, please. In order to get a 15% return on our money, we'd have to have an upside-downside ratio of 3.1. And we need to buy the company at a share price of $91.90. In the past year, the share price has dropped to that level exactly 0 times. In fact, the last day it hit that level was June 3rd in 2024. Next slide, please. So if the price falls to $91.90, I would really recommend you do a quick analysis to decide if the company has fallen off a cliff or is in time with the downtrodden economy, and whether something, whether those things are impacting the company. The Descartes Global Logistics Network provides a really niche solution to shipping industry users. And as I mentioned earlier, Descartes has now moved into the hold zone. But I'm still pretty excited about the company, and I really highly recommend spending some quality time studying this company and learning about what it does in the world economy. And full disclosure, tomorrow I'm going to do more of that and wait for that price to go back down under 105. Thanks. Talk to you later. And next slide, please.
Kent, I'm rather surprised you actually have a stock that you're pretty bullish on. That's not normal for you when we do our presentation.
You're right. Yes, not. I was really surprised.
Anyway, well, next up, and certainly not last, is Lisa Fosland has Amgen, and she couldn't make it because of work. So, Cheryl, you're going to take over for your club member and tell us all about Amgen, are you not?
Here we go. Lisa Fosland, as Kevin just said, she's unable to present tonight, but she's a fellow DC chapter director, as well as a fellow member of the Model Club of Northern Virginia. NASDAQ has Amgen, or AMGN is the ticker, is set to announce its second quarter earnings result tomorrow after the closing bell. Analysts expect a growth of more than 6% in both earnings per share and revenue compared with last year. According to Seeking Alpha analyst Sivanan Burzomati, key acquisitions since 2022 have increased Amgen's rare disease pipeline and footprint in the market, with the company poised to benefit from the rare disease market's 10.35% up to 2037. Amgen seeks to join the biopharmaceutical industry's weight loss therapy bandwagon. Its candidate, Maritide, is undergoing testing, and if approved for patient use, it would supplement existing treatments such as Wegovy and Zepbound, respectively marketed by Novo Nordisk, NVO, and Eli Lilly, LLY tickers. Amgen seeks to join the biopharmaceutical weight loss industry bandwagon, and its candidates, I'm up to the next slide. Finding a gene on a single fragment of DNA among 1.5 million fragments of the human genome. Amgen researchers worked tirelessly for 2 years. The groundbreaking achievement enables the creation of one of the most successful drugs in biotech history, Epogen. Epogen, which gained government approval 6 years later, boasts productivity of red blood cells to counteract the anemia associated with kidney failure. Today, it's a minor contributor to total product sales. In 1985, a second team's research leads to the development of Amgen's second blockbuster drug, Neupogen. In 2021, Amgen and NASA team up to study Amgen's osteoprotegerin on the Space Shuttle Endeavour. In 2005, Amgen partnered with 4 nonprofits to found Breakaway from Cancer that has reached hundreds of thousands of people touched by cancer with information about resources and services available to people and their loved ones affected by cancer. Maritide is just one of the candidates in Amgen's robust development pipeline. At year-end 2024, the company had 24 compounds undergoing end-stage clinical studies. In 2024, Amgen had 13 products with annual sales of $1 billion or more. The top seller was Prolia, which generates $4.4 billion or 13.7% of total product sales. As of May 1st, 2025, the U.S. produced $23.3 billion in U.S. produced companies, which is 72.8% of total product sales and a growth of 14%. International businesses generated $8.7 billion or 27.2%. 14 products delivered at least double-digit sales growth in Q1, including Repatha, Blincyto, Tezspire, Evenity, Tavneos, and Uplizna. Imdelltra generated $81 million of sales in Q1 and launched in Japan in April 2025. Amgen's pipeline includes a variety of innovative medicines across several therapeutic areas, including oncology, inflammation, and cardiovascular disease. Some key examples include Lumakras in oncology. It's an inhibitor approved for previously treated advanced mutated non-small cell lung cancer. Amgen is also investigating Lumakras in combination with other therapies for various cancers. Imdelltra is a T-cell engager antibody construct being investigated for neuroendocrine prostate cancer and other DLL3 expressing tumors. Other oncology candidates, Amgen is also exploring targets with molecules like AMG 160, AMG 193, and AMG 757. Other therapeutic areas include Alasparsaran, which is with cardiometabolic cardiovascular disease, and is a small interfering RNA that lowers lipoproteins. It's being investigated for the treatment of alloceratoic cardiovascular disease. There also are biosimilars. Amgen is also developing versions of existing drugs such as ABP and ABP 234. BiTE, or biospecific T-cell engager technology. Amgen utilizes this technology to engineer antibodies that bridge T-cells to cancer cells, activating the immune system to kill the cancer cells. And targeted protein degradation. It's exploring this approach to develop new cancer therapies. Amgen also has a broad portfolio of ongoing clinical trials across various stages of development, including phase 1, 2, and 3 trials. These trials are evaluating the safety and efficacy of their pipeline drugs in different patient populations and cancer types.
5 minutes, Cheryl, 5 minutes.
I have focused on phase 3. Phase 1 studies help scientists understand the safety and correct dosing of an investigational medicine or vaccine. 10 years to move from phase 1 to regulatory approval, only 10% make it past this. Maritide update. First, obesity treatment with monthly or less frequently doses. Strong efficacy with up to 20% weight loss without a plateau at 52 weeks. In phase 3, the improvements to heart failure, obstructive sleep apnea, and atherosclerotic cardiovascular disease outcomes will be studied. Maritime's simple and convenient dosing can potentially improve adherence and long-term weight control, providing the opportunity to optimize health outcomes for people living with obesity and obesity-related conditions, including type 2 diabetes. Here we are looking at the historical sales among peer comparisons. As you can see, the graph makes it look like they're all pretty much in the same area, but you also need to check out the numbers as well as the graph to see who's actually the winner, which is Novo Nordisk. Same thing with historical earnings per share, all vary within the same range for the lines on the graph, but the numbers tell a different story. And that is that Novo Nordisk, as well as Eli Lilly, are leading the pack. Pre-tax profit, again, kind of same within the range. Check out the numbers to really find the winners. Under the SSG Plus graph, there is much information on a company's fundamentals in the past 10 years. The dark green line are sales is up 9.4% from a year ago this same quarter. Earnings per share have increased over 1,600 in that same period. Price bars have also increased year over year and is now at 50% of the current bar. The light green line shows an increase of dividends, while earnings and pre-tax profits have shown up and down movement. In the past few quarters, thank you. In the past few quarters, Amgen have beat their estimates. Amgen's most recent large deal was his October 23rd acquisition of Horizon Therapeutics. The all-cash transaction was valued at $27.8 billion. Through the acquisition, Amgen obtained Horizon's newly developed therapies, Tepezza and Krystexxa. This and other acquisitions have caused an increase in debt. Price to earnings, you can see that the current price to earnings is a little bit higher than the 5-year average, which makes it slightly overvalued. Ranges are pretty consistent except for 2024, which I would look at as an outlier and stay within the current. Here we have value line. Despite the company's strong start to the year and positive near view term, the equity has been moving a bit lower of late. We think that's due to the uncertainty surrounding tariffs and drug pricing cuts. We also suspect a recent lawsuit in which Amgen was ordered to pay $406 million to Regeneron for engaging in monopolistic practices with Repatha against rival drug Pruluent. Didn't sit too well with investors. Even so, based on Amgen's upside potential and attractive yield, total return prospects to 2028, 2030 are above average. A top-notch safety rank of 1 adds appeal, and price stability of 95, financial strength of A, and earnings predictability of 100. Don't hurt either. Here are the Amgen evaluating risks and returns. As you can see, they're in the hold zone with a 2.3 to 1 upside downside ratio. and a potential price appreciation of 63.6. Amgen's ratio, their relative value, is in a good range of 111 with projected in 101, and the PEG ratio only slightly above the 2.5 that average that we like to see. In conclusion, Amgen is a large-size, mature growth company. It's a well-managed company. It's trading near the midpoint of its 52-week range, while it remains well below its prior high of $346.85, offering potential value if core growth resumes. It's a hold up to, and the price is $270.90 to get a 15% total return and a 3-to-1 upside downside rating. It's currently trading around $297, supported by healthy dividend yields and consistent earnings, but below its recent highs. Its valuation reflects a steady income-oriented investment rather than a high-growth speculative play. The company offers balance for investors seeking a reliable payout and moderate upside. And it's a worthy company to add to a watch list. And thank you, Lisa, for your work.
And hats off to you, Cheryl, for doing a great presentation at the last minute and managing to pronounce all those drug names.
Yes,
I
that
was thinking of all those
uh,
drug names. That was tough. That was tough. Anyway.
Well, I could have botched them and nobody was going to come back and tell me about it. So
Anyway, let's go to our next slide. And again, we have a really nice turnout here. So we're going to do a recap, and we're going to ask all the presenters to be able to do it. So again, we're going to look at Walt Disney, Constellation, Descartes, and Amgen. And if we go to the next slide, this is where we talk about the life cycle. This comes from the digital handbook, and it really comes from T. Rowe Price, where he believed, and he wrote back in 1939, that a company like a human being has three important phases: growth, maturity, and decadence. And so why don't we start with you, Helen? Why do you have that location for Disney?
Hi, I'm Helen. I put Disney there because I think that Disney is an extremely mature company, and I'm not sure that they are getting to the point where they can do 15% annual return for a 5-year doubling of the investment.
Okay, fair enough. Dan, why don't you tell us why you picked that location for Constellation Energy? CEG.
Yeah. So I picked that location because it was just in 2022 when Constellation broke off from Exelon Corporation, and right immediately after, they did the tax-free transition. So it now looks like there's going to be a great margin recovery potential, and we think that because of the data economy, I think that there's some growth that will come into place because of that. So because of that, we placed the star right there at the mature growth area.
Okay, thank you. And before we ask Kent why he picked that location for Descartes, again, attendees, if you want to either raise your hand or start to ask questions of any of the presenters, now's the time to do that. And Kent, why did you pick that location for Descartes?
Descartes is really it's a high growth company, has been in its history. However, I think I see some headwinds for it, especially given the current world economic environment. And so I think it's still got a lot of really good growth in it. So I wouldn't call it quite mature growth, but it's not quite explosive growth either. So that's why I put it right there on the line. And I think it has some potential, but I think it's got some serious headwinds being a Canadian company just across the border from a U.S. economy. So that's why.
Okay. And Cheryl, why do you have that location for Amgen?
Well, even though Amgen has been around for quite a while, it's the way the company has grown within its pipeline of continually adding on new drugs and giving also new ways to use those drugs. And I do believe that is going to keep them from sliding any further at this point in time anyway to the right on the mature growth.
Very good. Well, thank you very much. So let's go on to our next slide. And now it's an opportunity for all of you to vote. And again, we're not necessarily asking you to be able to vote for the one that you think has the best buy or upside downside ratio. We're asking which of the presentations sort of intrigued you enough that you want to do further research on your own. So let's go ahead and release the poll and let's ask our attendees. And again, we had a really nice turnout tonight. Thank you all. And let's start voting away. Okay, we got about 33%. Now it's 40, 45. The votes are coming in. 55% of your voting. Good for you. We sort of hit a little glitch there. Let's see if we can get ourselves up over, there we are, we're over 60. Can we get up over in the 65, 70 range? Maybe?
Kevin, is there a reason we can't vote as speakers?
Yes, you can't vote. Sorry.
All right.
That's the trade-off. That's the trade-off for being in the back room with us. So anyway, we're at 65. I'm going to give it a couple more seconds in my head. I think we're stuck. So go ahead and release that and share with everyone who won. And there you are, Constellation Energy. And Dan, because you ended up getting that, you know what that means? You get to come back and do another presentation. So congratulations, Dan. You get to do another presentation for us. That's what we get. And just to be able to let you know, Helen, just because you came in last place, you too will have an opportunity to come back and do another presentation. How's that? You know, we don't want you to feel like you've been slighted if we're just letting Dan in, okay? So anyway, thank you all for for the presentations. It was wonderful. Glad to have you. Let's see. Kent, do you see any questions in there? It looks kind of quiet. I haven't. I think I do see a question or two.
I got a couple
Okay, take them
questions
away.
here. Actually, I had a comment that said my vote would have been for none of the above. So that's
Okay. It's okay to have a none of the above. Maybe we'll have to put that in there. I know the roundtable does that, so we may have to start to add and give a fifth choice because 4 isn't enough. So, but again, if any of you have questions about any of the particular stocks or want to be able to ask any of the presenters what they learned along the way, now's the time to do it. Go ahead and raise your hand. We can unmute you, or you can just type it in here. And I am not seeing any hands raised. Do you, Kent? Am I missing them?
no, I'm not seeing any either. So I think we're clear.
Well, let's keep going. We'll come back and ask a couple other times along the way. But Cheryl, let's move along.
You're not seeing?
And I'm still seeing the share the poll results. So I think you have to take that down.
Okay, hold on one second.
I can probably do it, but I don't want to gum things up. There we are.
Okay.
There we go. So again, if you have any additional questions, please consider writing them in there or raise your hand. If you need to be able to reach any of us, there's the Digging into the BI contact, or you can also be able to reach us at the Maryland or DC chapter. Here's a picture of some, but not all of the people that have done presentations for Digging into the BI. That was last year at Bink in person in Chicago. Thanks to all that are there. And I saw we had several of them in the audience tonight, so thank you all. Let's go to our next slide. And this is how you can be able to join the mailing list. You do not have to be a member of better investing, nor do you have to be a member of the DC chapter. This will be able to get you on our mailing list. We don't inundate you. It's just usually educational things like this or other key events that we have going on. So you can just be able to sign up. The URL is up at the top in the where the blue background, or you can just find it through Better Investing. And again, you don't have to be a member. Next slide. Kent, why don't you tell us all about volunteering?
All right, now we got some folks out there with questions, so we'll get to you in a minute. Okay, so let's see. Let me move this out of the way. Very good. So, volunteers. So as you might have guessed, this entire event this evening was put on by volunteers from multiple chapters across the country, and these are folks who keep BI going. As a nonprofit organization, this is the only way that BI can stay alive. And so volunteering is a great way to keep learning about investing, as well as to provide more folks opportunities to learn about investing. Now, chapter volunteers learn new skills, and we also improve our investing skills. And I learned about that from this particular stock presentation tonight. We also get to help educate folks. In addition, another benefit that you get is discounted rates to various BI training programs, whether they're national or local. And you can also get complimentary subscriptions to the BI tools on the website. So if you'd like to learn more, let us know. We'd love to have you join us. Thanks. Next slide, please.
So here are the events that are coming on up in September. Again, we're going to be on the second Monday because the first Monday is Labor Day. The stock to study is Booz Allen Hamilton, and the undervalued feature is Nike. We still have two more to be determined, and that's largely because I'm looking for two more people to help do presentations. So if you're interested and you want to be part of this community, the best way to be able to learn is to be able to jump on in there with both feet and help out. We have a template to help you out with. We'll give you a mentor to be able to help out with. You don't have to be an expert on any of this. If you're willing to try and willing to be able to talk about investing in stocks, we'd love to have you. If you're in a club, we'll feature your club as well. So please consider doing that. You can reach us here in the chat window, or you can also sit there and send an email to the diggingintobi@gmail account. Let's go to our next slide. This is also the stuff we have up on Manifest dashboards to be able to keep track of everything. Again, you don't have to be a member of Manifest to have a subscription to it, but it does help you sort of see some of the other things. Let's go to the next slide, and you can see all the hyperlinks for it. There they are. I do have a few more I have to add in there to be able to get things going. But again, you can take a look with any of these hyperlinks, the stuff that we have up there. Next slide. And this is really it. We have, again, the underline. We'll show you where the YouTube channel is. Kent, I think you said we have a couple other questions or so. So before we sign off, let's do
so
that.
Richard, do you want to, let me see if I can figure out how to unmute you. There we go. Richard, if you want to go ahead and ask your question, feel free.
Can you hear me now?
Yes.
Great. I was interested. Hi, Kevin.
Hi.
From the Blue Chip down here in Virginia Beach. So slide number 55 has to do with Constellation, which I'm interested also in Constellation. But here, it includes the data from 2020 and 2021, but they weren't really in existence in 2020 and 2021. They were still part of Exelon. They didn't get spun off until 2022. So I wanted to know if that was valid to do.
You know what? I think, I know that Constellation, Exelon, they had the utility company in southeast Pennsylvania around Philly, and I think they also took one here in Maryland as well. I forget. Dan, do you know where their acquisitions or how things separated on that? I don't know all the history.
Yeah, so I missed the first part of that question. I was getting ready for this next BI event that's getting ready to start here in a couple minutes. But could you just repeat the first part of that question, please?
I just wanted to know, it really has to do with the combination of things. On this slide, you took in consideration the years 2020 and 2021 and dropped off 2018 and 2019. And then on the next slide, I think on slide 56, you dropped off 20 and 2021, but included 2018 and 2019. So I was just trying to validate whether or not you could actually include historical sales on a company that didn't exist. It existed only because it was spun off, and that was not until 2022.
Yeah, so let me pull my notes back out. You're probably correct. One of them had to do with the fact that the sales, there was some kind of, it was a little kind of hokey in how it was mixed in. It was embedded in 18 and 19. It was embedded inside of Exelon's consolidated reporting, and which was it was all kind of mixed together. So it kind of wasn't exactly clear, but I kind of went along with what the core SSG had and just kind of went that route.
Okay, and that was a great presentation. I'm interested in doing as well companies that are nuclear, and one would be, Dominion Energy has 2 power plants, but their past sales, they're not strong enough for me to do a presentation locally. But I could look at it possibly in the future. And another one that I'm looking at is the one that is BXWT. But in regards to Descartes, I was wondering, Kent, if those figures are presented in Canadian dollars. Consider they're a Canadian company. If they're using Canadian dollars, then you can certainly buy it now.
Yeah. Actually, if I were to buy it on the Toronto Stock Exchange, it would be in Canadian dollars. On the NASDAQ, it is in US dollars. But you actually raised a very interesting point, yet another lesson I learned with Descartes, and that is that BI's company symbol for Descartes on Toronto Exchange is DSG.TO, whereas on the NASDAQ, it's DSGX. And so what was very interesting is on the Toronto Exchange, the BI numbers were in Canadian dollars for the the share price, but sales, revenues, and net income, earnings per share and net income were all in US dollars, which was very confusing. And so I'm not quite sure what the rationale for that is in the Morningstar data as to have that mix like that. And also on the Munich Stock Exchange and the Frankfurt Stock Exchange, it'd be traded in euros. But
One
then
thing I'd like to add,
reports there should be in whatever denomination they're based in. Yeah. Where the exchange is.
One other thing I'd add, Richard, is that if you look at the SSG data and you look at the company description, if you do the drop down on that, you'll be able to see, and they'll show you in the Morningstar data that we get from BI, they'll have, if it's in Canadian dollars, they'll have a parens and they'll have like the C with the dollar sign in front, the C, capital C in front of the dollar sign. So you're dealing in Canadian dollars. So keep that in mind.
One of the other interesting things is that Descartes does not have any reports, even though they're traded on a U.S. exchange. they don't have any reports in the SEC. So I've had to actually go up to the Canadian Stock Securities Commission to learn more about what's going on with Descartes. So very interesting. Like I said, I learned a lot with this company.
Very good. Well, I think we're pretty much done here. People are jumping off here. So I want to be able to thank you, Richard, for asking some good questions and challenging our folks. I want to be able to thank our presenters for doing it. And I also want to thank you, the audience, for being here. This was a really nice turnout for August. Maybe it's because things are so hot that you want to stay in a cool spot. And we'll see you next month when we're going to be doing it on the Monday after Labor Day on September 8th. And we'll be looking at 4 new stocks. So please join us. And thank you for being here. And let's dig into the BI. Good night, all.
And please don't forget to download your handouts.
I think we can jump off. I think anyone that needs to has gotten it.
Okay. And if you need to get together with me to download the previous ones into YouTube, let me know.
I'll get them in. Anyway,
All right.
good night, all. Thanks for everything you guys did.
Good night.
Good night. You're welcome, and have a great evening. We'll talk to you soon.
All righty.
Bye-bye.